How is everyone doing? So, not so interesting day, is it? Market has not done anything today. Or yesterday, for most people. We have continued to range, acting support, acting resistance, pretty much going sideways in a range that price has pretty much gone sideways before. And if you look at it, what I like to call the deja vu move. So this is the area. This is the area that we challenged. So this is the entire day, almost 2 days, right? Within the same range. So price on the 15th came up into this range, and then we have 1, 2, 3, 4, 5, 6, 7, 8, and 9 candles. That is almost 36 hours. 36 hours in the same spot. So one whole day and another half day. So that is a huge amount of time spent there. And we've kind of done the same thing again. You have 1, 2, 3, 4, 5, 6, 7, 8. So pretty much one more, another 4 hours. So 4 hours and 4 hours, 8 hours. And then maybe we see price coming down, right? So let's see what happens, right? Now we are expecting at least a retracement down. My current expectation is price to eventually try and go up into this region here. While looking at the charts, I was not spending enough time on the 4 hours looking at this structure here, which would have given us an indication of price pushing up, and we would have pretty much, the moment we formed this here, we could have taken a buy at 1926 and held on to it. Now that's fine. It's already happened, but we learned, we looked at it, we tried to identify what's happening, gold giving us that expectation. Now, understanding what happened at NFP should have given us a little bit of a push down. We haven't seen that yet. We haven't seen any adjustments in price. Price has just continued to go up. Now, if we are expecting price to go further up, definitely possible, because this could be an acting support. However, within this range, this is where we started melting. Price has now come back into that range. Similar move. Look at that. Went bullish within the same range. Closed within the same range. And then the next few hours has ranged within the same range. But the only difference is we did get a sell signal within this 4 hour based on candlestick patterns. Here we haven't received anything yet. This is all just consolidation. There's no, we can call it a good range up or a good range down. This is just going sideways. Now, when I mentioned price seems to be adjusting at this level. Hi Lakshmikant, morning. So I forgot to start recording. Okay. Let's do that now. Yeah. Okay. So, morning Pegzy, morning Lakshmikant, morning whoever's here, whoever's not. Great to have you guys here. It's been a very, very weird or not so eventful day today. Right, overall. So what we are pretty much looking at is kind of a deja vu move or a historical structural move. So we went bullish within this range here before price eventually made the decision to go down. This was the final area where price made its signal to go down. Now we have consolidated in this range. Look at this, how many times? Once, twice, thrice, and now 4 times. And this is what I was saying is price coming back into this range is again a dangerous thing in itself, because there's a lot of rejection area. Now, how do we say that price is exactly going to reverse here or go all the way down? There's no such indication yet. We have gone bearish within this area itself. This is where we made the decision to go down. We've come back to challenge that now. Is the challenge going to hold, or are we going to break above? So once we break above 1982, well, we're going up, right? We're going further up, and then possibly further up, and possibly even retest the trend line right there at the top. But we've spent 36 hours here. Let's look at this here. We have 4, so 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17. So this was news, I believe. Let me pull news. So this was the news candle here. So it's inflation giving us a push down. So today we have news. Hopefully that news can give us a drop down. Expectation on that news is in the favor of the dollar. We'll see. We'll take a look at that as well. Now what has happened is we've spent so much time within this area here, taking support and resistance at this level in previously. But at the same time, when price came down, the structure was a good level of support, and that's why we're seeing that difficulty in breaking down. Price has taken support here when it came into this range. It consolidated within the range of 82 and 60, broke below, broke back up, came back down, and then continued to range within this area here, and then eventually giving us a break below, push up, and then a good breakdown. Now, this is a very eventful area, right? Price consolidated for a decent amount of time. Now we've consolidated an entire day in that range. That's why it becomes now tricky. Is this the kind of formation we're going to see? Consolidation, drop, and up. We couldn't see anything. There's no structure to yesterday's moves based on the 4 hour, right? There is no stepping stone created. It's not like, so what gives us additional confirmation that price is going up into this range would be if market gave us a move, something of this sort. Say we went into this range here. Let me draw that there. So say we made this, came back down, consolidated a little bit here, went back up, came back down at this range here, consolidated a little bit, and then we get that push up, right? And then maybe down. So for this to happen, there should have been that kind of a market structure. We didn't necessarily create that structure, but what we have done is probably created a minor support. Now that is, either you can treat this as a significant amount of rejection, or you can consider this as a stepping stone. Price has to make its next move to confirm if it's a stepping stone or not. Currently, there is no indication whether it is immediately going up, immediately going down. If you look at 1 hour, now when I say price adjustment, this is what I mean. So we saw that there's a divergence on the 1 hour. Price entered that divergence. Price has done nothing but consolidate into this range here. But if you look at the RSI, price has slowly made an adjustment towards the downside. And it's now about to cross, again, the moving average line, meaning it could again try and attempt to go up, right? And that makes it really difficult because price is now giving us a mixed reaction. So this is what generally happens when we have a lot of consolidation. Price adjustment for a initial push up and then a decent drop down. That is what historically I have seen. Let's see if we can see something similar. within this range here. So we consolidated towards the sideways, but we started dropping, making an adjustment initially, and then pushing up, right? This is something that we could expect today. Let's see further left hand side. Now look at this. We have pretty much consolidated with this entire range the entire day, right? On the 1 hour. And look at that. A complete adjustment towards the downside, allowing price to make a push back up, and then eventually falling back down, making a push back up. That's just consolidation right there, right? So we have a significant amount of struggle in this range where price has always struggled to make a decision. Now, if you go back into the 4 hour, you get a perspective, because we had a struggle going up and we had a struggle going down. Same range, right? Look at that. 82 area, unable to solidify its move towards the upside. Same thing, struggle, trying to push back up, came back down, similar region, unable to break below. Eventually making a decision, going back down, but now we're back into that range. So one of two things that we're looking at, right? So let me go here and let's go into the daily. Since we are back into this consolidation range, now if you look at the daily, you get a different picture a little bit, right? We didn't close doji. What we did close though is above this area here. So current daily can take support, no imbalances between 1, 2, and 3 daily. Yes, there is an imbalance here. Will eventually come down. We know that our initial targets are towards the downside. However, will we start dropping here because this is where we initially took the push down, or are we going to take that up here, right? So that is the thing to find out. So price can now ideally take support, and let's look at the weekly, and that is a weekly area of rejection where price has taken rejection in that range before. Now at the same time, if you look at this weekly bodies here and we go back to the daily, we see that we are trapped within that range right there, right? So we are trapped in that range, but now push towards the upside looks more likely, right? So we are expecting it to jump up all the way up to 75. Why? Because there's a lot of rejection in this area, and there is a lot of there's a strong resistance here, right, comparatively. And then we have a possible trend line. I wouldn't consider it a major trend line yet because we don't have any confirmations there. We've broken through a weekly trend line to jump up. So what I want to look at is now the weekly picture. The weekly picture pretty much doesn't have a picture, does it? So if I was to take this here, well, we've kind of formed, haven't we? Is it this? Yeah. So we have a better range. If this is to be formed, this is going to be the last last area of resistance. Now we've broken through all possible trend lines, so this is the last one. Once that's broken, well, why not? We can challenge up all the way to 2016 looking at the weekly, right? So we are within this weekly range here, this candle here. Now if you are expecting, we can still see a possible push up, tap, and drop. Now how big of a push up is that? That brings us not as high as 75, does it? 75 is going to be all the way here, 77. So let's look at daily. And daily is so if you are to consider daily, this is what we see on the daily, right? Possible. Still selling pressure coming in due to the resistance of this trend line here. Is that going to be broken? Well, ideally, I would consider what's happening here right now as more of a retest. Price closes at that level, next one opens outside of it. So if you look at it, we've kind of opened outside of it. Now, reading the candles, we closed with a bullish spinning top. So bullish spinning top pretty much means that the momentum is kind of reducing. When we see these kind of candles being formed after a massive push, that is where it can get a little bit challenging, because number one, we are either entering a consolidation range and it's facing pressures from both sides, and that's why you see that compression from the top and the bottom kind of being equal. That is how you would read that spinning top is you have a decent sized body, but you have almost an equal top wick and an equal bottom wick. That is where price is struggling to break above or break below. So it's facing an equal amount of pressure at both ends. So this is where price becomes a little bit more interesting. So on daily, that is what we see right now. Let's see what else we can get, right? So look at this here. We have another bear spinning top on the daily, closer by. Almost an equal top wick and an equal bottom wick. So we're seeing everything here, right? And that's why this consolidation with the type of rejections we see, we have a rejection right here, we have a rejection right here, we have a rejection right here, another rejection here. So many areas of rejection. Price can reject at any given point. All we can do is try to identify the highest point that it can reject at. Try and look for potential entries there. So let's see. And now if you look at this daily range here, historical rejection area is price tapped back into this area here, and that's where it found rejection. Now let's look at further back, right? Price dropped down, came back up, found rejection within the same range that we are at right now, and reversed, eventually breaking above and then falling down. So are we going to see something of this sort? Let's see, right? Let's look at the left hand side. We are kind of within the same structural area, so this is definitely something that can be possible. A historical move repeating itself, right? Let's look at further left. Further left, kind of a similar story, isn't it? So broke below, broke above, couldn't go further up, cleared the entire imbalance right there, came back down within a similar range, struggled, and then eventually broke down within this range here. So now if we look at it from here, 1971 and 1976 looks like a better area of rejection, doesn't it? Starting, this is in 2020 when price initially reached this area, going further right. Current area is also a strong rejection area. We have 1, 2, 3, 4, possible 5, 6, and multiple here. So we have a lot of rejection at where we are. So we have to just be very careful in trying to take any trades right now. If you haven't entered any trades, just wait for price to give you a confirmation. Price breaks above, takes support on the 4 hour. Well, ideally at this point, I would want price to break above this area here, right? So let's go into that. And now let's go into 4 hours. So ideally, you want now price to, let me take this out. I would want price to go above, take support at that range right there. See, a rejection at that doji right there. I don't know why people keep saying that dojis are not powerful. They're very powerful. It depends just on where they're positioned. If they're at the bottom of a bullish move or bottom of a bearish move or the top of a bullish move, it depends on that. But a lot of times they are powerful. So see, you have a lot of dojis that will be formed within this area as well. So dojis are always a good sign, or they give you a sign of how market structure is going to be positioned. So just like symmetrical triangles, dojis are pretty much where buyers and sellers are pretty much fighting each other and there's no proper decision being made. Now, okay, this is where I would like to look for buys. Is price breaks above, takes support, we go for buys, and we look for the target being 1975, all the way up to 1977, right? That's going to be one conservative trade. We can look for entries at the bottom, but we haven't been getting a proper retracement. Price has just been trying to go climb up and up. So if you're looking for buys right now, that's going to be the area for buys. So let's go into this here. And let's put that buy so that I can post that into, so look at this 4 hour. 4 hour is currently taking support of that trend line right there. So I will put a long just a little bit above, and I'm going to wait for it to take support. Now this is a very small trade, right? So 40 pips, let's see, right below the current candle, it's going to be 47 pips, 121 pips trade overall. Let's make sure we have enough take profits. I don't think we can have more than 3 here. Right, this looks like a good area. Multiple rejection within this range here, so let us mark this here. We have 1, 2, 3, and 4, and then a bunch of right below that. So that could be your TP1. It's going to be a very small TP. And these ranges are really 30 pips, 72 pips, and 124 pips. So you can make around 200 pips on this buy here if price breaks above. Now, just don't position this trade, and we will talk about that, the psychological aspect of it. But this is kind of a conservative buy, but it's kind of a mixed conservative aggressive buy. It's not necessarily highly safe. It's not necessarily highly aggressive either, right? We're waiting for price to break above, retest, and take that entry. So we have one reason is that trendline price is currently acting as support at that range right there. The previous 4 hour just closed minutely above. The next one taking support right above that trend line. So do we expect price to kind of stay there and come back down all the way here? Right? We need something to give that push. Right now, at this time of the day, I don't see that happening. So if you look at DXY still has a decent way to go down. This is where I expect price to probably take support for the day. Now, left hand side, this is looking at the weekly. A good area for price to take support. Price has taken support in that range multiple times before. So monthly, good area of support, right? Excellent area of support. So if you look at monthly, price can pretty much dip all the way down here. We are clearing out this imbalance here that's on the weekly. But on the way down, we're also creating an imbalance on the monthly. Sorry, this is on the monthly. So we know that DXY is going to continue to fall now. But what happens once all the imbalance on morning, Dubai trader? I believe it's quite early for you. But yeah, great to see you here. So breaking below. Monthly is telling me that this is the initial spot that we're going to see a little bit of power coming in. That's probably going to be by the end of this month that we're going to see the monthly drip down, because we've made a huge swing in 2 weeks, right? Huge move down. So looking at 1 week, we made a decent move down, but we've left a bunch of imbalance there. Now, if we were saying we are going long term down, right, that makes it really difficult because we are leaving a huge amount of imbalance right now. So the next week has to come up, clear out at least 50% of this imbalance, because then the markets are adjusted and then markets can continue its way down, right? So we'll look at what news we can expect next week, since it is Thursday. For me, it's Friday for you. It's the last day of the week. So if we are in a bullish move towards the upside, we can expect a bearish move today. And yesterday and day before yesterday has kind of aligned us along that lines, is to see some possible sells today. Now, if we do end up seeing just buys and no retracement today, that also positions us in a good spot. Looking at DXY, this is a good area. Price has gone bullish in this range. So if we enter this area and this is where we close the week, next week we can expect price to go up, right? There's no pair out there that just is going to go all the way down, right? It always has to make a retracement, and that retracement is merely adjusting the markets. So looking at DXY, that is what is giving us a good indication. AUDUSD struggling to close above that trend line right there, kind of another form of expectation. GBPUSD has a decent space to travel further up. I'm expecting a rejection within this range here, right? This is a strong monthly trend line, so I expect to hold, or not, like, I expect it to not just break easily, right? I would rather see it so that we're at a area where price has gone bearish before, so we can expect a little bit of rejection on the current weekly candle. But we know GBP is quite strong. Is it going to be able to make that move up that easily? We don't know. This week we might see a little bit of retracement. Next one clears out this imbalance, goes back up, maybe sees a rejection, and the next one clears and breaks it through, right? Given the power that we're seeing, or the momentum we're seeing on GBPUSD. But looking long term, we know that GBPUSD is kind of weak. So looking at these coupled USD pairs and looking at DXY, everything's kind of getting aligned towards a possible retracement down. So what do we need to do is we just need to wait, right? Market needs to do its own thing. We did collect a few pips yesterday, so if you weren't in this trade, this TP1, TP2, and TP3, you did collect a decent amount of pips, mitigating some of the loss that we took, at least I took, the past day. I won't say I'm still in the plus for the past couple of days, but I'm almost there. And so if we trigger another take profit, perfect. That's going to put my stop loss to BE. Otherwise, I'm going to take a little bit more of a loss, which is fine. I'm willing to take the loss just so that I don't screw with my psychology. So we'll talk about some of that. Now, what can we expect? Again, we can expect possible push up. Well, 4 hours kind of taking that drop down. Let me make sure that I've adjusted this for 4 hours. Yeah, this is good enough. Right. We know that we have broken through this trend line right there. This one here. So on the 1 hour, we see that rejection there and then a push above. So currently we can still expect possible taken support. Now this is going to be A broken trend line can act as a support and resistance. So price can find support in this range to try and go further up, right? So that is why on our sells, we have positioned our stop loss within that range right there. Because if you look at the left-hand side on the 4 hours, so 1950. So around this range here, right? This here. You look at left hand side, price has taken support there historically. 1946 and 1940s, I believe, all the way down here is where we are seeing a bunch of support. So that's going to mitigate the entire gap and could still give price a further push up. But right now we're still in that range, right? Now sells still those, buys are these. Ideally, you want to be looking for a possible retracement. Price takes possible support in these two areas. Now you need confirmation to take these entries. And if you're taking your buys, say over here, right above this area of resistance at 1948.9, 1949, this is going to be 35 pips. This is going to be 50 pips. So your stop loss is, say, right below this candle here, right? Right below that wick. So it could be 22 pips, considering the trend line. If price takes support of the trend line, I won't be looking at those buys here. I would only be looking at buys, possible buys in this range. Price mitigates the entire gap, the entire imbalance right there. Has a historical area of support for that range. Price takes support of that range, and then a possible push up. Right? I don't expect today's day to give us, like, we don't have that big of a news coming in today that it's just gonna, you know, give us a 400, 500 pip move down, right? This in itself is 200 pip. And price on average moves 100, 150 pips naturally without any news. And if you look at, even with news, we barely got 1100 pips. Sorry, not 1100, 110 pips. So 150 would have been our expectation. Average move with news during a day is expected to be 150 to 160 pips. Price didn't do anything today because we've seen price has spent 36 hours previously and almost 2 days before that in this range, just between 1963 and 1956. So the expectation is this entire move towards the downside, or this gives us 178 pip move towards the upside. Now, which one works out is going to be the thing, right? That's the range that we have. We have almost a similar range up or down. So only take careful trades. It's still not the safest atmosphere. We are back into a range where price has consolidated too much. So you have to be extremely, extremely careful and attentive when taking your trade, right? So yeah, I'm gonna look for buys. I'm not gonna position my stops there. I'm gonna set my alerts on my end, and I'm gonna take those positions if I see evidence that price is stopping there, right? SL is at 66. Yeah, so I'm also holding the sell, the top sell. So I'm also in this sell. Ideally, I could have been stopped out right there. I have a couple pips on my end to be safe. If price goes up, you know, obviously I'm gonna get stopped out of this trade. This one is still in drawdown, and I have trades running here. So you saw me securing 4 TPs. This is one of those TPs yesterday. Right, so 1, 2, 3, and 4. So I've not counted this towards the monthly pip counter because I have still not subtracted the amount that we lost on the stop losses. So I still have to put that in, which I will today. So, okay. That is the current expectation. So if you're looking for sells, the same ones are still valid. You could still look for a sell right over here at the top. Right, 1974, 1975, that area right there. If that works out, fantastic. If not, well, there's nothing much we can do, can we? Price will just continue further up. Once we break above 82, we can say bye-bye to gold and expect it to go up. But look at what is the current situation. We don't have a huge amount of news coming in today. We have some news coming in next week, right? So now let's look at the news just with that. So today is, we have Michigan consumer sentiment and import-export prices. Those are medium impact newses. Michigan is also not that amazing, but it's fine. June 30 at 10 is the last news. So let's look at June 30 at 10. June 30. I don't expect it to give a huge amount of move, this specific news. So look at that. That specific day, we only had that set of news, right? Personal income, personal spending. We actually had more. Oh no, this is a different one, isn't it? June 30, yeah. What the heck happened? Why is this not showing up here? June 30 was the last news. It was good for the dollar. The past 3 newses on Michigan sentiment has been good for the dollar. But this one, why does TradingView not show it to us? Let's look at June 16th at 10. June 16. There we go. So within the same range, right? So called it a deja vu move. Price going sideways the entire day, just going up, rejection, going up, rejection, staying there, doing nothing, continued there. Now we've had something of this move yesterday in itself, something of this sort. We stayed in there. We didn't make a decision of going down. We didn't make a decision of going up. So with this 147 pip move, well, can't expect much, right? However, this is the one that initially gave that break right there, and then eventually price continued to drop down. So let's see if we get the same thing. Now let's look at next week. What can we expect next week? If we expect next week to be bullish, we expect today to give us bearish. If we expect next week to be bearish, we can still expect today to be mixed bearish or bullish, or pretty much just range in this area again for the day. So let's look at this. So on Monday, we don't have anything. Okay. So we could potentially see something of this sort, right? On Monday. Tuesday is retail sales. Retail sales has been good. It's been getting better, right? Supply chain is settling in. Autos has also been good. So Tuesday looks positive for the dollar. Retail sales month on month has been good. It just turned good. So previous to the last time, June 15th, previous to that, it's been negative the past 3 newses. So that's a good thing that price is now being in favor of the dollar from that perspective. That is easing into the economy. They're still not being extremely aggressive. So retail sales, well, they are kind of. They're expecting it to go to 0.5% from 0.3%. So this could be a neutral or positive news. But yeah, this one kind of has a 50-50 chance of being positive and negative, because now they could be going aggressive, expecting that there to be a constant growth, rather than expecting it to be 0.3% again. Instead of looking at stability, they're looking at immediate growth, which becomes a point of concern. So let's see what that happens there. But overall, we can expect it to be good for the dollar, at least right now. And then we have building permits. Building permits should be going up, and it's been higher than expected the previous 2 times, so it's good for the dollar. Looking in favor of, so Wednesday is also looking in favor of the dollar. Initial jobless claims, continuous jobless claims, and so they have been a little bit aggressive with the expectation on jobless claims going up. So this time around also they're expecting it to go up. So go down. So they're expecting it to go up, which is, it did go up. It should have been below the below the forecast. So let's see how that goes. Existing home sales should be going up. Yeah, that's been good for the dollar as well. So in summer, again, home sales tend to go up. So we have Tuesday, Wednesday, Thursday where we're looking at favor of the dollar. So dollar can get, and then Friday we have nothing on USD. But people have been saying CAD news has been impacting. So I don't know retail sales on CAD if that's going to impact. I have no data to back this up. Some of you guys might, so please monitor that. So next week is looking bearish for gold and bullish for the dollar. So as we saw in the weekly, technical analysis has given us that same indication. So yeah, since technical analysis is giving us that indication, you can still wait out for the day and expect to play it out on Monday, right? You don't have to take a trade today. You can take the trade on Monday. Because Monday there's no news, there's not a huge amount of impact coming in. So if Friday makes a decision of going up or down, you can take a trade based on that. So just on safe side, you can do that, right? So next week we are expecting bearish. Now, yeah, so overall on gold, I would be expecting, as I mentioned, possible buys in this area. I would prefer to look buys within this range here, with price mitigating the entire imbalance and then trying to go bullish further up. Like another attempt to break above where it has failed multiple times. Once it fails there again, we can expect price to take a better push down, okay, which would be in line with our expectation for the current weekly. Sorry, with the monthly range. 1 month. So look at this. We are still within that range for the monthly, and we rejected closer to the body of the previous monthly. Now, pretty much not leaving any room for any imbalances. Price can still continue further down, right? So the current monthly still has a huge amount of scope. Next week we are expecting it to be bearish. Now that all those newses back to back giving us good news for the dollar could send this entire monthly all the way down. So the expectation for the current month is still a push down. We did expect this week to be bullish. Looking at news, it did work out bullish. So next week we are expecting it to be bearish, kind of in line. We created the top wick, we've gone up, created that top wick, and now we're going all the way down. So let's see what the market presents, right? But for the time being, coming back into the daily, If you are looking for buys, you would want to wait for price to break above 1960, take support at least on the 1 hour, and then go above, right? Then you can look for further move up. Why did I not say 30 minutes, like 15 minutes? I don't even care what 15 minute does, because if I look at 30 minutes, like the entire trend line is broken and price is just using that as an area of support, right? But and at the same time, if I said I want price to break above, say this area here, and take support, we might see like these candles closing up and then rejecting all the way down. So I'm not talking on 1 hour, those would be wicks. We don't want to see wicks. We need proper 1 hour closure and a support being formed, or a proper retest and then a break up and then a push up. Okay? If news just pushes it up, or if something else, some kind of fear or something else happening in the markets pushes it up, so be it. I would rather let it go up than get stuck in a trade where it just goes up, taps into my entry, and then reverses. I don't want to be stuck in that situation. I would expect you also to kind of think of it from that perspective. Save your money. Your money is not, for banks to make money on you. You want to make money from the banks. So this would be your best bet. Break, retest, support. So break, retest, support equal to enter. If this is not clear enough, I don't know what is. Okay, so we have Pexi and Gordy are still holding on to sells and buy and holding buy. Fantastic. So that brings us to the overall expectation on gold with a push towards the upside. Okay, so we'll see what price does. Okay, now with that, what else can we look at? So if you look at the current 4 hour, this is interesting, right? Go into the 1 hour. 1, 2, 3 hours completed. And look at this volume. We're still 4 minutes away, right? From Asia. And we're already from Tokyo, and the volume's already gone up each candle. Which if you look at it here, the previous 2 ones, barely any movement. Same thing, barely any movement. Barely any movement. But here, the volume keeps going up and up and up. So look at this one. This is where price went up, giving us this weird candle here, gravestone doji. No. Inverted hammer, I believe. Inverted hammer would be, oh, sorry, my mind is fucked up. Whatever, doji. Price going sideways, giving us multiple dojis in that spot, meaning price is taking a lot of resistance, but also trying to find the support. So let's see what happens, right? So I'm going to post this in Discord. Possible buys. And so obviously I don't want to look at this now because we are up into this range. So if you haven't entered any sells, look for break, resistance being formed, and then breakdown. But if you see something of this sort happening, price going up and down, up and down, up and down, you can possibly take an entry right below 1953, but that's not going to give you a lot of range to take the trade in. So this is the risk you're bearing. This was the best entry, I believe. Now, it just depends on you, which one you end up entering. I'm going to take this off. Okay. So Actually, I'm going to remove, no, actually I have that trade. I'm still holding on to it, so I'm going to keep it here. Right, and so yeah, let's see which one works out. Still these cells. Okay. And right there. There you go. So DXY, we are seeing it getting closer and closer and closer. Right? So it's pushing down, pushing down, and pushing down. Even on the daily, this is a good area. Price has good amount of rejection right there. Support from the top as well. Yeah, so that's on the weekly that we are looking at, right? And so I'm going to keep looking at it. This is going to be the eventual range that I'm looking at, right? These two lines here, as you can see, 1 and 2, right? Price has taken support here before, so currently expecting the daily to come back further down. So if we see that in Asian, which shouldn't give gold, like, which shouldn't give a lot of momentum on gold, because again, we don't have a lot of order volume or order flow happening during this time of the day, and so we would expect price to kind of range further while dollar finishes its drop and then tries to look for retracements. So on the daily, if you look at it, we've dropped imbalance, dropped imbalance, dropped imbalance, dropped imbalance, dropped imbalance. Now whenever we see this massive rainfall drop, so like a massive imbalance push up, imbalance push up, imbalance push up, we will see adjustment coming in, right? So cleared out maximum imbalances, at least 50%. Remember that. So price has broken through that support or that trend line, you can still expect price to go up here or up here and then possibly drop down, right? Because looking at weekly, this is the entire imbalance, right? Look at the push up, barely any imbalance on the weekly. This is the only part we saw the imbalance, but price, this was the part where we saw it based on the daily, price just jumping up, jumping up, jumping up, and then eventually taking that drop. And that is the drop right there, clearing out the imbalance, taking support, pushing back up, right? Leaving a very small amount of imbalance. So this is the main reason we don't trade based on gaps, just because price ranged here. People would, think that, okay, it's going to keep dropping and then it just reverses on you. So yeah, that is the overall perspective. So looking at gold, now you have a better picture, a bigger frame picture. That's why no matter how much we come and say, just because a few days dollar becomes extremely bearish, we can't say that, yeah, gold is just going to push up. If you look at the drop that dollar has taken, and if gold follows that, if gold follows the XY or the value of the dollar, gold would have right now been like at 2,500, 3,000. Would have been way up, not just like these few pips up. Okay, so first understand this. If you're trading gold, learn and accept this fact that it is sentiment. Dollar is pegged against gold. Even if you're looking at it, XAUUSD is the power of XAU against USD. right? So sentiment is what's going to drive gold. No matter what you do, no matter what you think, whether you accept this fact or not, you look at DXY, you have enough evidence to understand that. No matter who or what person comes out and tells you that DXY is what moves gold, it does not. Yesterday's day, the day before, the day before, the day before, there's a lot of evidence for that. So it's just fear that is currently driving. So we'll see what market presents. Okay? Fear of interest rates. So let me, okay. Yeah, so pretty much sells and buys. So look at this very carefully. Okay. So I was just closing off the recording for the analysis so I can post that video in. Now I want to come back to the topic of the economic factors and psychological factors. So the sentiment part and how economic factors like the fundamentals have an impact on it. I wrote as much as I could to try and make this clear, but we'll talk a little bit about that. Do you guys want me to record what I'm saying and post that as a separate video, or what do you guys want me to do? Before that, I want to look at AU, and I called it out, the trend line expectation, the rejection of the trend line, and I have a sell running right there, right? I've collected a few pips right now, so I'm just letting you know, right? So AUDUSD, I'm in a sell, somewhere in this range here, and this is how I'm taking the trade. So I'm in a sell right around that body of the 4-hour, and I'm expecting it to give me a drop down at least here. So this is where I'm closing 70% range, 70% of my trade. Ideally, I want to look for that drop all the way down here. This is on the monthly, so it's a powerful one. So I would expect AUD to give me a drop all the way down to 0.67. Yeah, no worries, Pexy. Have a good night. Yep, I'll definitely record it. So yeah, AUDUSD, I'm gonna sell. I called it out in Discord, so that this is gonna be what I'm looking at. So if you weren't looking at it, then please, yeah, this is gonna be the trade. And I'm collecting. I've already collected the take profit right there, and I'm gonna collect take profits at every 4-hour candle bottom. Okay. So this is giving me, I've already closed 11 pips. Next one coming in is 23 pips. That makes it 34. 37. That makes it 43. It's almost 70 pips, 69 pips. It's 112. And then 94 pips, right? At least. I would expect this to go all the way down, because if I look at it on the weekly, this could be a potential swing all the way down. So I'm going to hold the bonus and split it equally across the breakdown. Because now if you look at it, right? Weekly on gold, next week we're looking at a good week for the dollar, which means a bad week for AUD, because AUD is also technically weak. USD just got weaker than AUD, and so that's why we are seeing what we are seeing. So I would expect price to dip all the way down in the next week. So Okay, so if you haven't taken this trade, this is where I'm expecting it to go down to. Almost 200 overall pip trade, but across all take profits, this is going to make you, or make me, at least around about 500 plus pips. So we're collecting almost 200 plus pips, 200 pips in this range. Even if I was collecting these, 69, 92, 134, 168. See, this is so almost 1,000 pips on AUDUSD. So you can make a lot of money on this trade here. So AUDUSD, I'm in the sell. GBP, I'm expecting it to drive a little bit further up. That's the monthly trend line. So I'm not gonna enter any trades right now on GBPUSD. We could pretty much still, you know, go back down, and then the next weekly takes the wick at the bottom here and then continues its way up. Or the next weekly goes up first, gets rejected there, and then comes back down, because that would still be in line with this doji here, right? So expecting that the next weekly, no, this is where the next weekly would be. So it would be right around the range of this doji right there. And if you look at the monthly, clears out the imbalance right there, right? The monthly can come up all the way into this area where we saw the doji on the weekly, which is in line with these bodies, where price can then reject, make another attempt next month, and then drop down. And by drop down, I don't necessarily mean all the way down. You could come back down, take support in this level, and then build a momentum to break above, because GBP has been quite strong. So that's on GBP and GJ. Jeffrey mentioned that he is taking a sell and is holding a sell. Yep. But if you look at the daily GJ has made a good amount of. GJ is going up today, my man. GJ does not have a top wick. GBP still looks strong to go further up. If you're looking for re-entries on sells, this is going to be the area based on the daily, a good area of rejection for price to continue down. But price took support at this level for some reason, which is, do we have a support here? It looks like we do. Do we not? Yeah. So let's see where this lands us. Perfectly. Perfect support. So this is an area where price just went bullish yesterday. So we still have a range of further going up on GJ, Jeffrey. So if you are in a sell, I hope you've secured maximum profit so far, because you could see that push up today. Rejection could send it down. I don't know if there's no news today. There's news next week. And if I look at the 4-hour structure, rejected the 4-hour, opened up, just went bearish all the way, mitigating nothing much. Could find support right there. Power of that doji right there. Could take support. And if you look at this, there's a retracement happening. So that retracement could still send, because this has been my expectation, right? This is where there is a good amount of monthly rejection. The spot where we have rejected, the current monthly has just created a bottom wick is what I'm looking at. So the expectation that it's just going to keep driving down, I can't fit that into my mind. And if you look at the previous one, we didn't mitigate the entire imbalance there, did we? Just like 50% down. We are like 40% down. Could go further, maybe to 77 if at all, but looking at the current spot, this is where I'm expecting further sells. So if we didn't even come up here, right, and then the monthly rejected, yeah, I do still expect, and the weekly, if you look at it, there's no sell signal coming up here, candlestick pattern wise at least. Even though we've made that swing right there, it would be like that hook move. So something like this. Something like this. And up. This is what I see so far. So if it continues down, fantastic. This is where I have my stops, 85.9, 86. If price goes up there, I would be looking for sells from there rather than continue. Look for sells right here. And if I look at JPY basket has now started to see rejection. So current weekly, I am expecting for it to close below this area. So we might pretty much see further drop down because this is a good area of rejection, right? We've rejected at this area. We don't have to mitigate the entire imbalance. If at all price still pushes up, this is the area we can expect it to reach and then still find rejection. Mitigates almost the entire risk or the entire imbalance and then continues down. So if you look at the daily has taken rejection, forming this could now, you can look at this in the aspect of forming support or resistance. Now you just have to wait for price to give you that indication as to what it's treating it as, right? There's a strong amount of rejection here on the daily, and price has rejected that twice, 2 consecutive days. So we can expect a drive down today, at least to take support at 7115 for a possible push up. So be careful on JPY pairs today. Now what else were we going to look at? Look at that. GUD flipping. It's fine. Let's see. Yeah. We might range a little bit before we continue further down. Okay. So gold. We spoke about it, that gold is extremely sentiment based, right? So let me start recording it. Okay. So basics of gold. The economic aspect. Understanding the economic aspect of gold is pretty much how does gold get impacted, what moves gold, and how do you look at it in comparison to the US dollar and everything that's happening fundamentally inside of the US dollar. Number one, when you are looking at gold, you need to know this fact that gold is extremely sentiment based. Any fear coming into the markets, like the current fears are interest rate, previously recession. There's so many fears that come and go. Fears of war, fears of a pandemic, fears of something else. There's always going to be something that's happening in the markets, and businesses and institutions are going to react to it, and you will see markets making very big moves or maybe no moves at all in certain situations. If you're trading gold, understand the second aspect of it, that gold is sentiment based, not just based on DXY. You can look at DXY to understand where you can find dollar strengthening or weaken, right? That's the only position you can find. Gold will give you a lot of technical evidence of when dollar is starting to get weakened or when dollar is starting to get strengthened. When you see dollar and gold kind of moving side by side, that means the sentiment against the dollar is not weakened. The sentiment is good. If gold is dropping and dollar is dropping, that means the sentiment towards dollar is still good. It's just a temporary fall, not shaking the consumer sentiment or institutional sentiment. And once you understand that part, trading or analyzing gold becomes easier, especially against the US dollar. Now, if you look at everything that's happening within the US markets, specific types of news, they have their own specific type of impact, right? So that is where you need to understand how gold is triggered by not just gold, any pair for the matter of fact. Technical analysis drives forecasting for fundamentals. Fundamentals are what drives sentiment, and sentiment is what drives gold, right? So all of this is how it's connected. Now, technical analysis is technically the mechanisms in place. You can use Fibonacci, you can use support, resistance, trend lines, and all of that. Look at like RSI, other technical tools, SMC concept, whatever you want. These are technical tools giving you measures of future events. So you can expect what is to happen in the near future based on this. And that is what an analyst is supposed to do. So when you start trading, number one, you have to become an analyst, right? So when you're trying to become an analyst, this is what you also have to understand. When you start seeing technical evidences and you're identifying, okay, this is what is happening here, this is what's happening there. Okay. Technicals are giving an indication that price might be moving up in the coming week. Okay. You adjust your analysis based on it. You can take trades based on it. You can take trades in the other perspective. Now, trading comes later, right? Forecasting was established based on the technicals. Now we know, say, okay, next week is going to be bearish. Okay, next week we are going to see bearish. That means we're going to see good news for the dollars coming in. Dollar is going to strengthen. Dollar is going to do its retracement. So that means on gold, we're expecting price or sentiments to ease off, right? So when we're expecting sentiments to get eased off, okay, that means gold is going to drop. Now, if we're expecting a move down on gold coming week, we are expecting that based on sentiment. Technicals have given us that evidence. We looked at multiple sources of evidence. You looked at, say, RSI or moving average or whatever form of trading you're using. You looked at the moves. You looked at previous news. You looked at the numbers on the type of news that are coming up. You do a base averaging and you understand, okay, this is what is going to happen, right? That it's going to be good news. This news is going to be bad. This news is going to be good. The expectation could be neutral to good or neutral to bad, right? You have to have that kind of a bias set for specific sets of newses when you're planning your day ahead. This is also going to be extremely useful when you're taking trades on a funded account, because on a funded account, if you're trying to go in as a scalper, you are putting in high risk, low reward, right? High risk, low reward. So that's one of the major reasons a lot of people fail in funded challenges is they do not plan ahead. Planning ahead is really important. So forecasting is the critical aspect of going into a funded account. The people, prop firms that provide you millions and millions of dollars to trade in have analysts that work within the companies that are understanding what is the market doing, how is the market moving, what can the market present as an opportunity, etc., 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 right? So that is pretty much how all of that works out. So if you don't trade like them, if you don't understand how that specific model works, and you just go in, okay, I'll get a funded account. If I pass it, you have a higher chance of failing. 99% people fail, funded challenges because they don't understand these aspects, and they go in and trade gold, right? So understand which pairs you need to trade. So coming back to gold. So when you understand how to forecast, when you understand what's happening fundamentally, you can look at different aspects of it, right? So what happened in the current news, like previous news, current scenario, understand what is going on in the current scenario, and then try to connect the dots between macroeconomic environments and microeconomic environments. Policies are made at the macro level, that is the governmental level, and so let me pull chat, and where was this? So I shared a couple images for people the other day. I believe it's in basic concepts. Reading material. Okay. Save image. Okay. So here we go. Let me open this up. Are you guys able to see it? Okay, it's not showing up. Hopefully this is now showing up. So this is how everything works economically, right? The dots between what happens microeconomically and macroeconomically. And we're going to have a better video about this, a bit kind of like a slideshow based, but this is just kind of going through it real fast. So when we look at the microeconomic and the macroeconomic aspects, you need to understand that the policies that are made macroeconomically has an impact across the entire landscape in terms of microeconomic activities. So when interest rates go up, it has an impact because it increases the cost of operating businesses, it increases the costs associated to households, and so the taxes paid, if you're not making enough money, you're not going to pay taxes to the government, and so everything kind of slows down, right? Who are the contributors to the financial market? Corporations, governments, people like us, international investment, and then everything pretty much dives back into the commodity markets and then coming back into the workforce market, right? So when interest rates go up and corporations cannot afford, if corporations cannot afford doing business, if it's expensive for them, debt has increased, reducing profitability, they're going to cut costs. When they're cutting costs, pretty much the money flowing back into the financial markets is dropping because the labor market is getting disrupted. So this connection kind of breaks. When this connection breaks, this inflow breaks. When this inflow breaks, this inflow breaks, right? So everything gets broken. So that is why when the fear comes in, there's a fear coming in from people like us and the bigger corporations. Governments are making the policies, trying to adjust for both these stakeholders. So when an event like the one we saw recently, when say non-farm unemployment kind of goes up, non-farm employment goes down, when we see stuff like inflation is going down, which is a good thing macroeconomically, but microeconomically it's disrupting to businesses again, because the cost at which they've bought certain goods will be higher versus the cost at which they are selling is expected to be lower. Markets expect that price to drop. It's a gradual drop. It's not an immediate drop. There'll always be lag in that, because inventory would be the biggest aspect, right? When there's higher demand and less supply, the cost of goods goes up, because the cost of capturing those goods also goes up. So with inflation causing a change in sentiment without having a raise in interest rates, it's like a two-edged sword, right? Interest rates not going up, good thing, because it's not increasing debt, but inflation going down is still causing fear, because now they think that businesses are concerned that now their interest rate is going to go up. When inflation is dropping due to lag, slowly and steadily, what we expect to see is a slow adjustment in all different parts of this entire scope. Labor demand, labor supply getting settled in, corporations kind of adjusting to it, adjusting their process, adjusting their profitability, trying to increase their cash flows. So all of that kind of changes, right? And that is pretty much what we're trying to understand and what we're trying to look at here. So when markets are moving through these kind of events and fears are coming in, number one thing, understand what is happening, what to expect of the upcoming news, and how those news impact some of these fears. And so if, say, the upcoming week is all good for the dollar, sales are going up, everything else is going up, what does that mean for the dollar? Well, that pretty much means that if everything's going good, interest rates are not going to have a major impact. It's what is going to be the translation. If sales are going up, if demand is easing in, and cash flow is constant, it's not being disrupted, that is where people would be easing in emotions, and the fear of interest rate increase will drop substantially, and having an equal impact on the dollar and gold, pretty much. So the micro and the macroeconomic aspect in total, every time you see a different set of news, you want to look at this chart and you want to see and identify which part of these arrows gets broken when a specific news goes positive or negative. Any pair you're trying to trade in, to understand the fundamental impact and the upcoming forecast on different sets of newses, you want to open this chart up. It's in our Discord group, so you can download it. Hold this up. You can print this out, put like a sticky note kind of thing, put it on your computer or something, and you can use this to understand, because this is the ABCD of fundamentals. How, if any of these chains get broken, you can look at it and you can understand how critical of an arm it is. If it's something that is tied to the financial market, it's an extremely critical arm, right? Because when the investment going down into the commodity markets, if something's impacting the import and exports, that is disrupting the entire economic segments. And when you're looking at all of those stakeholders getting disrupted, pretty much that entire cycle starts to get broken. And so the fear comes back in. So any pair you're looking at, this is going to give you the perfect indication of what is happening and how to deal with it. Okay, so it's in our Discord group, so you can download it. What I'm going to do is I'm going to give you, let's see, where is this? Let me give you a link. Inside of our copy link. There you go. So download this and have this during any news events. If you're especially a beginner, this is going to help you understand which arm of the micro and macroeconomic aspect is getting broken because of that news. If it's good news, it's going to have a further inflow, right? If it's bad news, it's going to break certain part of this. And how important it is what's going to tell you how big of a move you can expect there. Okay. So that covers up the micro and macroeconomic aspect of the entire positioning, right? So if you have any questions, as usual, you can ask for that in chat, or you can ping me personally and we can talk about it, right? So I'm going to stop the recording. Okay. So I hope that helps. I'm going to make a better video that's just focused on that with a proper slideshow that's talking more into that. But yeah, this is how it all works out economically. This is how markets operate. This is how fundamentals operate. So if you don't understand how fundamentals operate and why news events have specific set of impact, why is it a good news or bad news, and you're only looking at, say you opened a news forecast and you see, okay, there is retail sales coming up, the expectation is 0.5%, and then you go in and you read a higher than expected figure should be seen as positive for the dollar, lower should be seen as negative for the dollar. When you're just looking at that and you're taking decisions based on it, it's not going to help you. It's not actually a good thing, right? So just from that perspective, you didn't understand the news. You didn't understand why it's a good thing or a bad thing. You're just reading it and you're taking trades based off of it. And that does not enable you to be a good forecaster. So say we had a few stop losses, right? Because I'm trying to catch a swing. I'm not just trying to catch some temporary moves up, right? My focus is on trying to maximize profit. So even if I don't catch good trades today, this week, I'm fine. I'm looking for that the better drop down rather than a major push up. Now, if price continues pushing up, that's perfectly fine. But last week, we still expected this week to be bullish. How would I know that? Why would I expect that? You need to think about that, right? Now, again, I was not expecting it to go all the way to 1950s, or I was expecting a decent amount of retracement, but maybe not all this high, right? But people had other sets of technical evidences kind of speaking to it. We saw the last weekend and Friday last week. I mentioned that now 1950s looks possible. We reached that level. We kind of continue further up. So there's different sets of technicals that are also giving you certain sets of evidences. But forecasting based on fundamentals, when they're aligning with what you're seeing technically, then you can enter more confident trades. Okay, so that is something that you have to be extremely better at if you're going to take trades in a funded account. Some of the major questions I get with regards to funded accounts. Now, if you guys have any questions, you can definitely ask about it. I'm going to post some content about it, some write-ups, a possible trading plan, and how I would suggest people to take trades in. I can't show it here, but basically, say if you're trading gold in your funded account, you want to trade gold, you have a 100K account, I wouldn't trade more than 0.5 lots as an overall position. So if you're trying to collect 5 TPs, I would only want to take 0.1, 0.1, 0.1, and 0.1, and another 0.1, like 5 0.1 lots, rather than taking 5 0.5 lots, because that's too much margin putting in, and you're expecting fast outcome. You are trying to secure risk, right? So 0.3%, 0.3, 0.5 overall on a push down. Say this kind of a push down all the way down should give you how much? maybe 400 bucks, 300 bucks. Steady growth is the main expectation from these prop firms. They're not expecting you to grow this money into 10x, 200x, 300x. That's why they have different sets of rules. That's why they have a maximum drawdown limit. That's why they have a maximum loss limit. So you keep growing an account and then you take losses, you blow that account because it's not falling into their strategy. You need to understand what their strategy, what's their expectation of you. There's a reason they're taking a test. They're trying to understand if you fit their criteria. They're not just trying to see if you can pass the challenge. They're also trying to see if you can pass the criteria. When you pass the challenge, they expect that you understood their criteria, and now you're going to trade like they expect you to. And you're mostly not going to be able to do that. Most people are unable to do that. And that has a major impact as well. And so that's why you have to be very, very smart in taking these trades. Very, very smart in taking specific positions. So 0.5, $400, it's fine, take it. If you get that in a day, that's fantastic. What's your target going to be? 8,000? So if you have a basic average of 200 bucks a day, you're taking minimum risk. If your stop loss gets hit, you're losing maybe 100, 200 bucks. You have enough trading days to make it, so your psychology is adjusted. If you are taking, say, 1 lot or 2 lots, you lose $500, $1,000 in an instant on a stop loss, your psychology is fucked. You can't do shit. Your brain is just going to be, okay, I only have this much margin left. I cannot lose this much money. Okay, now you're starting to hurry. You're starting to panic. So at all costs in a funded account, that's what you're trying to avoid. Right? You can use whatever tools you want, whatever methods you want to take trades in. Call it as like whatever concept you want to use. Smart money, ICT, like there's a bank, something. There's so many different ways people trade. Right? You can trade supports, resistances, trend lines, Fibonacci's, moving averages, whatever you want. But that kind of risk management is important. Now, people had a lot of discussion in chat today. There are some people that look at win rate. I don't like to look at win rate. I like to learn from my losses. Win rate is a psychologically bad thing, is what I've learned. I used to keep track of what my wins and losses are. I used to use FX book and an Excel sheet to kind of track it. But what I learned is the overall profits that I would make outweigh the entire loss that I make. So if I made, in my profits, if I made, say I grew my account 10% in a month, and my losses accounted to a loss of 1%, right? The moment I'm calculating this every day or looking at it every week, my psychology is fucked because I'm scared of losing money. I don't want to be scared of losing money. I want to be focusing on my winning trades and learning from my losses. I want to earn from my profits and learn from my losses. So if you can't understand that psychology, number one, are you getting psychologically impacted by looking at your win rate ratio? Because your funded account is going to be completely dependent on it. You are going to see your win ratio there. You're going to see your win rate. You're going to see your active daily profits. And so maybe you made one trade that made you 2,000 bucks, but your average across 10 days of trading is now dropping down to maybe 50 bucks. Psychologically, that's also going to push you to take another trade for no reason. There's so many things that can affect you when taking trades on a funded account, right? It looks easy, and you will always say, I'm not of that population. I'm not that 99%. I'm that 1%. I'm learning the concepts. I'm learning everything. I'm spending the entire time. And then when you lose the money, you're going to give up on trading, right? So it is not the technique that you use. It is not the process that you design. It is not the process that you follow. It is the analyst, and the risk manager within you. Trading has two main things: forecasting and risk management. By risk management, I don't mean, okay, you entered a trade here, now you're in drawdown, now you manage your... Yes, you can always manage your losses, but this is only good for scalping. You can manage risk by closing this trade, or if you're taking an average, if your stop loss is going up to say 66 pips, and your usual stop loss is 40 pips, so your risk is going up, that doesn't mean you take the same lot size. You reduce your lot size. Understand that. Then you're willing to risk 6% because you're going to lose 0.34%. So this is not even on my account size. So let me adjust this, right? Say account size is, say it was 100,000. If I was taking 5 lots, right, I would be risk to reward 3.23. Okay, I'm risking say 2% of my, let's say 1%, and where is this? Ticks price. This is fine. Yeah, this may not be the best calculator to look at, isn't it? It's only giving you a good amount. So I would have lost on this trade with 5 lots on a 100,000 account, $10,000, and potential to make $3,000. No. Yeah. Because I'm only willing to risk 1%. So there are proper calculators that you can use. FX Book has a good calculator to give you what kind of lot size you should use based on what type of risk, and then you adjust your stop loss based on those pips. So funded account, if you're doing it, that's one thing to take a note of, is what kind of stop loss size you're going to look at. Don't get into that custom of, okay, I took this entry, oh no, I'm in drawdown. You know what you're doing to yourself psychologically? You're going to manage risk. What you're going to do is you're going to close that trade most of the times. Oh no, it's going back up. I'll take a re-entry. Oh, it goes back up. Oh, you took a re-entry. Oh no, it's going back up. Oh, I'm going to close that also. That's one thing you're going to do. You're feeding your psychology with bad habits. Number 2, what you're going to do is, okay, price reversed. You close half risk. And then immediately price goes down. And goes all the way down. And you get the entire trade. Now, you're again pissed. Why did you do that? And then on the wrong trade, you might hold it. You might get that stop loss. And now, oh no, why did I do that? So you're bouncing between 2 positions. That is the worst thing you can do to yourself. So that's why I would rather take the stop loss than cancel my trade right there. Manage risk. I won't do that. I'm fine losing this money. I'll lose 10 grand, that's fine. I'll lose 100 grand, that's fine. Because when we're making it, we're making 10 times more, right? One trade can give you, over here, it says say 1%. But we know that across all these TPs, we are making a lot of money. We're maximizing profits. That is something that you need to understand. You can make a whole lot of money if you just understand how to secure profits. Don't focus on the worst thing. So you can do one of 2 things, right? There's so many people doing so many different ways of trading. You can either be another retail trader or try to be a trader that is possibly trying to reach a level where we're trying to compete with banks, a huge account, huge amount of money, right? Some of the larger, the 1 percentile of retail traders that make substantial amount of profits. You can be one of those, or you can be one of the 99 percentile. You can choose what you want to be. Create your own plan, understand your own psychology, understand your own planning, understand what's going right, what's going wrong, and then take your trades based off of it. Take your analysis based off of it. If you're going into a funded account and thinking that this is the right way to go, this is what price is going to do, it's not going to help you in any way. What it's going to do is, okay, first thing, you didn't understand, okay, managing your stop loss or managing your loss. You're getting into the habit, okay, I'm going to close my stop. I'm going to close 50% of my positions here. You're going to be one of those retail traders that once price starts moving 10 pips, 20 pips, you're going to close the trade in profits. And then you're going to say, oh, price went all the way down. Why did I close it that early? That's not a good thing psychologically, because you're not training your mind to do good things. Right? So if you're trying to get into funded account, if you're new, first is learn to be a forecaster. You have to be able to prove to other people that you have a valid reason for an entry. And why do you need to prove it to other people? Because you will never be critical to yourself. You will always, this is the worst thing I see in most traders. And I try to teach this, but a lot of people are adamant to learn about this. Right? No, this is the truth. No, this is what this person is saying. This is what that person is saying. Well, learn on personal experience. I learned on my personal experience when I was trying to look at 10 different people. No, this is how it works. No, this is how it works. They're always trying to sell a course. If this is how it works, just keep it free. Right? That's not going to be a good situation. So always try to find a good situation, a good understanding of like an experience, pretty much. Take a real experience. So what are some of the things that happen when you're going into a funded account? Right? People don't know how to forecast. People don't know how to read fundamentals. People don't know how to hold trades. People don't know risk management. People are learning the bad habits, not understanding the expectations from the prop firm. What kind of traders are they trying to take on, nurture, and flourish? These are the different understandings that you don't take up. All you do is try and copy other people, try and copy other trades. You always are critical about others, but not about yourself. So if I take a loss, I'm going to spend some time that specific day itself to learn why I took that loss. Why did my stop loss hit? Okay, price went bullish. Was there something that I missed? Was there something missing on my technical side of analysis? Was there something missing on my fundamental side of analysis? I will always spend time that specific day and learn from it. If like initially, I would do that in an Excel sheet. In today's day, like I don't maintain that because that's too much to do. I treat this passively. I treat trading passive, not as an active part of it, right? I'm not trying to make this a full-time job in terms of logging in daily in the morning, sitting till night, staring at the charts 24/7. That's not life. That's too much stressful for anyone. So you have to learn to do that, number one. There are traders that only trade or look at charts 2 hours or 3 hours, and they're not scalpers, right? I'm talking about scalpers do the same thing. They'll take 2 trades, they'll take some profit or loss and then just go away, right? But they're risking too much. So you want to keep a funded account, then stop gambling with that money. It's not your money, but it's going to help you build your own capital where you can take more risk without those same rules. So use it for that. And you don't have to jump in directly to a $500,000 account, $200,000 account, $100,000 account. If you don't know how to manage those funds, how to grow those funds month on month. Go for a smaller 10,000, 20,000, 50,000. Do that. Learn to grow that gradually first. 6 months, 3 months at least, minimum. How much can you grow that account? How much can you take a loss? Because you're putting in $100 or like $1,000, $600, $700 just to take that challenge. And if you fail that challenge, that's all gone. If you lose $100, that's fine. You have more chances that you can take. You're not just going to give up. Don't get greedy, right? Start small, grow to be big. It's a long-term process. 2 years, in 2 years, from 500 to a million, 2 million, 3 million, 10 million. Took me 2 years, but it was not an easy road, right? Lost money, gained money, initially gambled money. There's a lot of things I've done. The only thing different about me is to find success was analysis, and everything else, well, it took time, right? So you can make 2,000, you can turn 2,000 into 20,000. Put in your own money and prove it to yourself that you can do that. You don't need a $100,000 account to make that kind of money. People who know how to manage money, who understand these forecasting metrics, managing risk, taking multiple areas of profits, taking long-term trades, maximizing profits, people who know how to do that can, like, the 500 leverage is for them, because they can turn a $200 account into $200,000 account. So either you can be one of those people who are just scrambling for money from the $100,000 account. Okay, oh, I just barely made $1,000 this month. Oh, I barely made $2,000 this month. You're always going to be greedy. You always want to grow that money. And that is where psychologically you're always going to lose money. So you can either learn to grow that money slowly and gradually with different metrics, with real experience, or you can just try to go online and see, okay, this guy, this is what he said. Oh, this is what I'm going to do the same thing. Not everybody's the same, right? Everybody has a different mindset, different life experiences, decision-making process. Everything's different. So I'm not going to push you to do the same thing that I do, but I'm definitely going to push you to not taking the wrong things that 90% of people say online. A lot of people that don't do funded accounts themselves still tell people this is how you want to do the funded account. I have a funded account, I manage that funded account, but I don't use it too much. It's just there from a psychological perspective so that you don't get carried away on your own real accounts. You can use funded accounts from that perspective as well. So managing your psychological perspective is really, really important in trading. And some people don't understand that part. So it's completely up to you, right? But understand the aspect. Learn to forecast first. Then comes trade setups. Learn to give a reason why this stop loss, why this entry, why this exit, why these take profits, why this kind of long-term trade, why this kind of short-term trade. What is the overall ongoing aspect, right? So there's a lot of information there. So yeah, I didn't record everything that we just said here right now with regards to funded. I'm going to share some more information on that. The same thing, I'm going to give you a write-up and I'm going to post that into Discord. But I would rather have this conversation one-on-one. If you're trying to get into a funded account, jump on voice chat. Talk to me. Let me understand what your exact perspective is in trading. What are you trying to look at? How complicated your trading style is. I've looked at a bunch of ways people trade, right? I only retain stuff in my head. I can remember stuff once you start talking about it, but I always have the habit of going through different new process, like there's a new indicator that's out there and people say, okay, this is a great indicator, it makes profit, okay, I'll test it out. I will only let you know if something's good. Till now, everything that I've tried and tested has been horrible, right? So it's always after the fact. Once the event has happened is where these indicators will give you a possible. So you're taking a running trade, a running entry. You're not entering at the right position, you're entering midway, because those indicators will give you bad locations. Robots, I don't trust them. I have one built to myself and it's still testing. It's given me good profits on that account, but it's also having substantial amount of losses. And so understanding that bot so far has told me that you need at least a $10,000 account to be able to use a bot, because you could lose $2,000 this month, make $4,000 next month, lose another $3,000, and it's going to be a long process. Robots are not extremely reliable. So yeah, that's another thing, right? Look at the current price. Price has taken support, jumped back up, going bullish, close above into that range, current one trying to push further up. Will it be able to continue up? Looking at the RSI, we have crossed the MA, the moving average line, and after an adjustment right there, we could now make the move to go further up. Again, we are still in a range, so there's no guarantees that we're just going to take that push up. So Asian has kind of taken a massive volume, hasn't it? How long ago have we seen this kind of a volume in Asian? We haven't seen this kind of volume in Asian in a long, long time. This is the closest. This is also London. It's like New York session kind of volume. See, New York session volume. It's a lot of volume. I am extremely surprised to see that. Now, volume profile. That's another conversation in itself, right? When you look at it, what are the things you can learn? There's a lot of things you can learn in here. So you got to be willing to ask a lot of questions for me to tell you what's happening where. I try to talk about stuff that comes to top of my mind, but there's so many things that's there. You got to be curious. That's the number one thing. Who is an excellent trader? A person who is extremely, extremely curious. You need to question everything that is said, right? If you use Fibonacci, understand the history of it. If you use some other tool, understand the history of that. If you're using some kind of a trading strategy, understand that what is the underlying factors that specific trading strategy is using. Say if you're following ICT or smart money concepts, what of the base elements of trading is it using? Are we calling support and resistance something else and adding something on top of it for additional points of confirmation and have given that some kind of a definition? Understand that. Don't just go in and blindly, okay, this is called VOS, this is called so and so. Somebody created it, right? So understand what the overall meaning of it is, right? Don't just go in blindly. So if you're following smart money concepts, what is the overall basics that they're following? Is there still support and resistance is part of it, trend line is part of it, based on what I've learned, it still follows market structure, basic market structure, but it's just defining certain things in a different way. Demand zone, supply zone concepts have been reintroduced with a modern twist. Ask those questions. I've tried and tested a bunch of them, and it just made things complicated for me. And I now know that a lot of people use smart money concepts. What was that called? Indicator, Lux Algo, and there's a bunch of them that's there. To just use that to look at it, it all marks it up for them, and now they have additional forms of confirmation, right? So, but understand why that is. What is there? What's happening there? Why is that happening there, right? Question everything that you're learning. Everything that even I'm talking about, question it. Why is it like this? Why is it not like that? Why is it not like this? Speculate, right? Forecasting and analysis is part of that. Building out a story, right? So we are looking at a story on gold, right? Okay, this is the existing story. We are ranging here. Why? Historically, we have a reason for that, right? This is a historical area of consolidation. We are consolidating within the same range on the 4 hour once again. Okay. You have a bunch of evidences that this is also a good area of rejection. But at the same time, price has been trapped between both these points multiple times. We have so much information just within one range. Because we are questioning that, we are able to understand that it's not an easy move up nor an easy move down. SMC good for scalp trading, like 20 minutes and 50 pips trading. Well, yeah, maybe. Like some people also use it for swing trading, but you have to understand what is the primary aspect of their trading strategy there. Are they only using SMC as their major trading strategy, or are they just adding something on top of their existing trading strategy? Or maybe I even know traders that are not necessarily trading with SMC concepts, but they're just using Fibonacci and trend lines to take trades, but they're using all these different indicators and different trading styles, incorporating it within it. But all their entries, all their reversal zones, everything is based on Fibonacci and trend lines, right? Break of structure, change of character, all of these aspects, they didn't even trade based on it. It's just there because the part of the concept is marking all of that up. People do that. So you need to understand what is the ultimate part of your trading method that gives you trades. Setups, right? Setups, how are those setups formed? Is all of that break of structure, change of character, like looking at marking up all these 10 different things, is that giving you the evidence that this is the reversal area? I didn't do all those markups, right? We still find reversal areas. We still understand, okay, next week is going to be bullish, next week is going to be bearish. It's not even happened yet. With all of these concepts in the market, we're looking at things after the fact. At the end of the day, we are using supports and resistances. No matter what you do, you use fibs, additional form of confirmations. But at the end of the day, once the move has happened is when you can use fibs. Once the move has happened is when you can use SMC. The only thing in SMC you can use to forecast the future is to look at order blocks. There are people that just trade based on demand and supply, also called order blocks, but they don't hold all the time. They can be broken at any given time. I don't trade based off of it, mainly because when you look at order blocks, they can be broken, right? Demand can change, supply can change. And understand this part. If banks, if institutions know that this is what this is SMC is the new retail thing, and this is what they call order block, which was the demand zone, and this is exactly where they think we put our trades in, and we look for sells or buys at these levels. Let's change this level. What is stopping them from doing that? So say for example, this would now have been order block, right? This red candle here would have been an order block or demand zone. What is stopping an institution from changing this area into somewhere here and calling, okay, this is where we're going to place like 1,000 lots? Why are they always going to take a trade there? Just got to think about it. right? That's why I don't trade based on it, because the concept of demand and supply, the concept of order blocks, does not work for me. Because I've seen them broken easily. In some cases, easily priced without any news breaks through demand or supply zones. If banks are putting in millions of dollars at these areas, how is that possible? Just think about it. So I know that they work out as long as they are in a good rejection area, good resistance area, good support area. Now that's I've not created this trading strategy. This is just the basic of market structure. Market is structured around supports and resistances, and all these other concepts are built on top of it. All of the other concepts are technical add-ons, just like a trend line, just like RSI, just like moving average, just like everything else. Supports and resistance, there's no market, there's no structure, there's no price action without supports and resistances. So if you cannot mark what's a good area of resistance, what's a good area of support, why price is there, why price is not there, a lot of these other concepts will not give you a reason as to why price is stuck there. So understand and ask those questions, right? Scalping can be rewarding with high risk. It can also blow your account equally fast, build a greed equally fast. I have not seen one person that is, like, very few, maybe like less than 1%, where they don't dance on their chair when they see, oh, 10 pips, 20 pips, oh, 20 pips, 30 pips, oh, fantastic. Very, very small numbers of people. Why do they do that? Like why do they react like that? Oh, I call it right here. This is what's happening, this is what's happening. Well, I'm not mocking anyone, I'm just letting you know that this is just part of reality. This is what's out there, this is what's happening. And people look at it and they put their money in. I don't ask you to put your money in, and I'm not comparing myself to them or them to me. We are our own traders. We all have made money. I make money a different way, they make money a different way. A lot of people have gimmick. I just don't have time to give you a gimmick. So I'm focused on making money, and I'm focused on my life. I would want you guys to do the same in your own lives. Focus on yourself. Don't focus on what somebody else is telling you. Don't focus on what somebody else is doing. Focus on what you can do for yourself. Trading is all about that. With all these concepts in the markets, people don't ask any questions. And today is ICT, tomorrow is SMC. Day after it's bank zone. Then the day after it's something else. So many concepts in the markets, and everybody is looking at, okay, this is a good area of resistance, that's a good area of support. Is there one person out there that doesn't call it that? Why isn't there a new fancy word for support and resistance? Right? It just becomes a gimmick. Twitter is all about SMC nowadays. Smart money concepts. Like, old traders have never heard about this. If this was such a unique and amazing concept, wouldn't banks trade in it? Because they have more money, right? They can wipe you out instantly. So you can take whichever trades you want. I have nothing against SMC or ICT or anybody else. It's just, for me, it makes my trading complicated. I would rather take a loss than complicate the way I trade every day. If I have to look at the charts like for 10 hours straight, all I'm doing is stressing myself out, and I'm probably going to take more losses in the coming days. So I'd rather take more profits without complicating my trading strategy too much and focusing on forecasting. I would rather forecast where price can move into or away from, rather than focus on marking up too much on my charts, right? These lines, messy, but it worked for me. Always works for me. Gives me an idea of what market structure is doing, right? So if I was trying to tell you that there's a re-entry, and if I hadn't marked this up, you wouldn't see this happening. You wouldn't see this happening at the daily line there, and then we wouldn't see this happening. So the entire structure right there really helps. Some people don't like to see these many lines because of all the streamers that they don't show that. They're just showing this is the area, and then people come in. Is the now a buy? It's now a sell. These lines are technically meant for those people, because when you look at that, and if you know the basic part of break and retest, or break and support, or support formation, just these few basic concepts, and you look at my chart, you can still find trades, right? Break, retest, enter, buys. Resistance, couldn't break above, come back down, look for a retest area, price retest, creates support, now you enter a buy, price goes up. So structure is the key. If you can't understand structure and you're just focused on too many other things, you're kind of turning yourself blind. So just try to find a better medium to find, to understand where can market go, what is market expecting to do, understand the story behind it. If you can't understand the story, well, you'll always psychologically be stuck. Oh, no. Yeah, okay, I'm going to close my trade 20 pips. All price is starting to reverse. That is always going to kick in. If you don't know the storyline, so if you're watching a movie, right, you want to wait till the end. You should have the patience to wait till the end. There are a bunch of people that just skip the movie, right? They're just constantly skipping it, or they're speed watching it. Those people have less patience to go through the entire thing, to have the entire experience, no matter how slow the movie is. So same thing applies with trading. Sometimes, especially the 1 hour and the 4 hour looks very slow, but it is equally rewarding. Slow is good. You don't age from 1 year old to 100-year old in a day, do you? So why do you want to apply that to trading? Just basic aspects of life. So yeah, there's a lot of things that I can share based on my experiences, my understanding, and my expectations of the market, and my acceptance of what I've learned, of what I've experienced in these markets. I can share a lot of it based on questions that are most recently asked. People have been asking for funded related information and some of the other informations. But yeah, I just want you guys to be curious. People used to laugh when I said I make 1,000 pips or 200 pips, 300 pips during other people's streams. They're like, no, this point. Oh, no, that's my entire month's worth of money. So I gave them evidence that, okay, I actually made the money. Oh, no. Then now it's fake. Okay, I gave them an advance notice of this is the trade that's going to work out. This is my expectation. And when that trade works out, oh, yeah. I've seen a different way. There are some people that you cannot convince at all. If you give them an advanced trade, okay, this is where I'm expecting price to reverse, they will say, this is where I expected price to reverse. Even if I posted an advanced chart sometimes, they'll say, no, this is a fake chart. He's just putting it at the top and putting it at the bottom. It's a gimmick. And that's what's led me to do this online stream, where people called me up from that perspective. So that is what not necessarily hurt my ego, but made me understand that their gimmicks is what's hurting other people's accounts. And I'm an investor by nature, so it hurts me to see people lose so much money, because there's so many ways that you can make money in life without having a 9-to-5. And the people here are working hard for that money. They're losing their accounts. They're losing their money watching all of this. Instead, each of these people should be giving them confidence, understanding that different people make money different ways in these markets. There are people that make millions in a day in these markets with different trading strategies. That's not supported, right? Scalping is not difficult, but it is risky. And it's not highly rewarding. It damages your psychology. That's why I hate scalping. I've tried scalping. I've made scalping initially. I've made money scalping initially. But that's why I learned. From losing $5,000 consecutive losses to worrying that substantially over the past few years. And understanding that I don't have to be watching the charts too much. I haven't watched the charts as much as I have been recently because I've been streaming. So that is an added stress to me for sure, because I'm trying to show people what I see. And it is a really difficult job, because when I'm looking at all of the structure, I'm looking at so many things that yes, there's a chance that I'm going to miss something, right? When I'm on my own and when I don't have the mentality that, okay, I have to stream today or I have to do all of this, it's not part of my daily structure, I'd be seeing so many more things. You know, it does add some more things to my life, because I have to manage my life as well while I'm doing this for everyone. So I'm trying to be extremely diligent if I make any mistakes and if I identify them. So like this head and shoulders here, I didn't see them initially, and then yesterday I just inverted the chart and I saw it. So that was my mistake. I didn't see it. If we saw it the moment it started forming, we saw the initial rejection, I would have called out a buy entry to hold for it for the recent long term, right? So yeah, part of it is all learning. So please, no, it's quite late for me. I've stayed 1 hour over talking about so many things. Again, I love talking. I love to share more information. There's a lot of questions that I still need to address. Timing is still something, you know, that I'm trying to work through, so I can give you more time in the coming weeks, especially during New York sessions or something else, giving some people one-on-one sessions through the week. I'm going to try and do that. So we will see what we can do, but yeah, always feel free to ping me personally in Discord. Everything we do is for free, and it will always be free. Okay, you can record this and you can post it anywhere. If I turn back on my word, you can make it public. Okay, I will never charge for this group, for this channel, ever. Nothing for training, nothing for coaching, nothing. All I expect is I cannot give you 10 hours of my day. I'll give you 30 minutes, but in those 30 minutes, I'm going to make sure I help you. Understanding you, helping you understand certain things, giving you certain tasks that you have to work on. And then the next time we meet, or as we're chatting through, you are touching base on it. You have to do that. If I'm giving you time, you have to make it worth it. If you're not making it worth it, I may not give you more time. Right? So time is money. If you know what kind of money we make through these trades, then you should expect that other side of business I'm probably making more. And so me giving you even 30 minutes is really expensive for me. But I'm willing to do that because, as I mentioned, building out that panel of traders that are trading on funds provided to them, which is not a funded account. It's going to be funds, my funds. So that is my investment. My investment is an investment I'm making for myself. So I am selfish there, but so I'm very strict about it. Like, money is not a joke. So if I have a fear that you're not the right person, or you're not putting in the efforts, then obviously I'm not going to spend too much time with you. Instead, I'll spend more time with people who actually need it. I want you to grow your $100 into $1,000, 1,000 into 10,000, 10,000 into 100,000. I want to help you do that. You got to let yourself help me do it. So yeah, we'll keep chatting about this. Tomorrow is Friday. So tomorrow, Asian, I will be here. New York, I'll be here. And we'll look at news, I will jump on VC and we'll chat at least for 30 minutes to an hour. We will do it. Okay. So thank you for tuning in. I'm gonna keep this running, and I will, see you guys in New York. Okay. Have a good rest of the day. Good night for those it's night, and safe trading.
primary control of critical vehicle function.